Hi Raj. Before we even start preparing a T2 return, we need to understand the client and gather the right information.
So T2 preparation does not start in tax software.
Exactly. It starts with understanding the business and collecting financial data.
What kind of process do you usually follow?
First, we meet the client and understand their business operations. Then we plan compensation such as salary and dividends. Then we collect bookkeeping records and financial data. Then we prepare financial statements like income statement and balance sheet. Then we prepare the T2 tax return. Finally, we review the return with the client and file it.
So it is a full workflow, not just data entry.
Correct. Corporate tax preparation is a structured process throughout the year.
Once the return is ready, how do we file it?
Today, almost all T2 returns are filed electronically using CRA certified software.
Why is electronic filing preferred?
It is faster and gives instant confirmation from CRA. It reduces errors because calculations are automated. It ensures secure submission of data.
What happens if someone files on paper?
There can be penalties. Paper filing by a preparer can result in a $100 penalty. If a corporation is required to e-file but submits paper return, penalty can be up to $1,000.
So electronic filing is the standard.
Yes, every tax preparer should use professional tax software.
Do corporations need to file separate returns for federal and provincial taxes?
In most cases, no.
How does that work?
The T2 return includes both federal and provincial taxes for most provinces.
So one return covers everything.
Yes, except for 2 provinces. Alberta requires a separate provincial return. Quebec also requires a separate provincial return.
So for most provinces, CRA handles both taxes.
Exactly. The system is integrated to simplify filing.
I noticed something called NAICS code in the return. What is that?
North American Industry Classification System, NAICS, is the industry classification code used to identify the business activity.
Why is that important?
CRA uses it to compare your business with similar businesses.
Can that affect tax assessment?
Yes, if your numbers are very different from industry averages, it may trigger review.
What happens if I choose the wrong code?
Then your business may be compared with the wrong industry, which can create unnecessary CRA attention.
So accuracy matters.
Always choose the code that reflects your main source of revenue.
When do corporations have to file their T2 return?
The rule is simple. A T2 return must be filed within 6 months after the fiscal year end.
Can you give an example?
If the year end is December 31st, the filing deadline is June 30th. If the year end is March 31st, the filing deadline is September 30th.
What if the deadline falls on a weekend?
Then the next business day is acceptable.
So filing deadline depends on fiscal year.
Exactly. Each corporation can have a different deadline.
Is the tax payment deadline the same as filing deadline?
No, and this is a very common mistake.
What is the difference?
Taxes must usually be paid within 2 months after the fiscal year end.
Can you give an example?
If year end is December 31st, payment is due by February 28th, but filing deadline is June 30th.
So payment comes earlier.
Yes.
Is there any extension?
Yes, some corporations get 3 months instead of 2 months.
Who qualifies?
The corporation must be a CCPC. It must qualify for the small business deduction. Its taxable income must be less than or equal to $500,000.
So small businesses get extra time.
Correct, but you must confirm eligibility carefully.
Do corporations always pay tax at year-end?
Not always. Many corporations must pay installments during the year.
When are installments required?
If the previous year tax payable is more than $3,000,
How do installments work?
they're usually paid monthly.
Can you give an example?
If last year tax was $24,000, monthly installment is $2,000. So the corporation pays $2,000 every month.
What happens at year-end?
These payments are applied against the final tax liability.
What if installments are too low?
CRA will charge interest on the shortfall.
What happens if a corporation files late?
If tax is owed, penalties apply.
How are penalties calculated?
There is an initial penalty of 5% of unpaid tax. Then 1% per month is added for up to 12 months.
Can you give an example?
If tax owing is $10,000, initial penalty is $500. If filed 12 months late, additional penalty is $1,200. Total penalty becomes $1,700.
That adds up quickly.
Yes, and interest is charged on top of that.
What about repeat late filings?
Penalties increase to 10% plus 2% per month for up to 20 months.
So it becomes very expensive.
Exactly. Filing on time is critical.
Before filing, do we need client approval?
Yes, authorization is required.
What forms are used?
Form T183CORP confirms that the client reviewed and approved the return. It also authorizes you to file electronically.
And what is RC59?
RC59 allows you to represent the client before CRA.
What can you do with that authorization?
You can access CRA accounts. You can communicate with CRA. You can manage tax matters for the client.
Who signs these forms?
An authorized corporate officer must sign them.
Can the preparer sign?
No, only the client can authorize.
So these forms are mandatory.
Yes, without them you cannot legally file or represent the client.